I got to tell you, the only thing I disagree with in what I've read so far, and it's far from me to disagree with Oprah Winfrey, but I don't think that it's that you have superhuman ability. I think it's that you show humans how to make themselves super. And I think that that's what you're trying to do once again with this book. What is the goal with the reach and what you're trying to teach with the new book?
Well, you know, I've written 2 financial books previously, so this is the 3rd in a kind of trilogy. I have no intention of a trilogy, honestly, Chris. But, you know, so many people are behind on their financial goals. And there's only a few ways to accelerate that. You either have to save more money and invest it, or you have to get better returns. And, of course, to take better returns, you got to take bigger risks. And so I was talking with Ray Dalio, who's a dear friend of mine, one of the most successful, as you know, financial hedge traders in the history of the world. And he taught me a principle. He calls it the Holy Grail. And it's basically understanding a little principle of how to lower your risk by 80% while having the same kinds of returns or greater. And part of that is being able to diversify between 8 to 12 assets that are not correlated. For your audience, you know, some things move up together, they're correlated. Some move in opposite directions. Usually stocks and bonds are opposite. But unfortunately, in 2022, they both went down. And so that was part of the trigger for me, like what's out there. So I had the privilege of interviewing 13 of the most successful private equity investors in history. And these are people that have $20 to $100 billion funds, and Chris, they consistently get 20% compounded per year, some of them 30%. And, you know, big institutions, the ultra wealthy, pension funds, they get all this money. Most people don't even know it exists. But there have been some changes in Congress to make this available to a large portion of the population. And I came across some ways to help people access this. So I wanted to show people how to reduce their risk, how to grow, and how to tap into this extraordinary opportunity that only the wealthy have had before, which makes me crazy. It makes no sense that legally we only let wealthy people invest in these types of investments and we limit everybody else. But that's now changed.
Qualified de-investors. They put it under the SEC law where they have high net worth individuals because they think somehow they understand risk better. So, Tony, let's take a step down the road of why for you. You say this makes you crazy. You do not need to do this. You're way busy enough, and you have written so many things, and you've reached so many. What is burning in you to want to do this? It's not like you're selling something. I mean, you're selling the book, but it's not like, you know, you have a hedge fund you want everybody to invest in. Why?
No. To me, it's just unjust for, you know, I suffered. I grew up totally poor, so I know what it feels like. I'm not poor anymore, fortunately. But to give you an idea, in this book also, all 4 of my last books, I've given away 100% of all the profits to Feeding America. I set a goal to feed 1 billion meals over a 10-year period, and I'm proud to tell you, last year, 8 years in, 2 years early, we surpassed that. Now I'm working on a 100 billion meal challenge because the number of people starving around the world has gone geometrically because of the Ukraine war. It's the breadbasket. And also because of Russia. We don't have the fertilizer that we need. And so most people aren't paying attention to these things. So while people are helping themselves, I have a vehicle that also helps to fund that. But I also just get excited about the possibility for people. If you're, like, for example, most people that in their 401k have it in the S&P 500. It's a great investment. Over the last 35 years, you've averaged 9.2%, which means you're basically doubling your money, Chris, about every 8 years. All right, it's nice. But if you, not these guys, not these 20 and 30% guys, if you put an average private equity, it's averaged 14.2. So what does that mean? It means you're making 50% more returns every year compounded. So if you put $100,000 35 years ago in the stock market and forgot about it, it's worth $2.6 million today. But if you put the same $100,000 in private equity, it's worth $13.9 million today. So being able to help people to do that. And here's the other thing that excited me, Chris, is I was lamenting, even if you can legally do this, Congress just passed some new rules, the House did, the Senate's picking it up, bipartisan, amazingly, that said you shouldn't have to have $1 million to do this or $200,000 in income to be a accredited investor. You should be able to take a little test, study for it, and you know what you're doing. Why wouldn't you get in? It's not that complex. So the Senate's picking up it as well. But one of the things that excited me was, okay, now you can legally do it. I already had that option. It's like, how do you get in some of these best funds? And quite frankly, Chris, I'm sure you know because you travel in these circles, it's like trying to buy, you know, the top Ferrari. They're already pre-sold to all the Ferrari drivers. It doesn't matter what the price you want to pay. Well, what's interesting is I was lamenting about this to a friend of mine who works with Paul Tudor Jones, and he started his own firm. He says, "No, you've done so much for me. I've got to tell you where I put most of my money." He's a super successful guy, so I'm leaning in. And he said, "Well, there's this firm called Kaz in Houston, Texas." And when he said Houston, I'm going, not New York, not Singapore, not London, Houston? And he said, "Yeah, Tony, they're outside the bubble. And here's what they've done. Instead of fighting to try to get a little slice of one of these funds, they've spent billions, and you can become a partner in these firms. In other words, if you look at the Fortune 400, the richest people in the world, and say, what industry has the most billionaires? It's not tech, it's not real estate, and it's not hedge funds. It's these guys, the masters of the universe, that do private equity. And so the reason is because they make 2% on your money, and they tie it up for 5 years. And people are willing to do that and give them 20% of the profit because they produce such huge returns. Well, now you can actually buy a piece, Chris, a small piece or a larger piece, partner with these people, and you don't get charged 2 and 20. You make it, and you get all their funds, the ones in the past with low inflation, the current ones, and the future ones. So I'm fortunate enough now to have 65 of these firms that I have a piece of, and I want these opportunities for a larger audience of people, and I want the people that can't have anything to do with this to help get the food they need. So it's a great combination, and hopefully inspires people to what's really possible.
Hey, thank you for watching. Please go to newsnationnow.com, newsnationnow.com, and you can find NewsNation on your television provider. And don't forget to click the red subscribe button down below. Then you will get more of NewsNation's fact-driven coverage.